For more on the markets and our top picks, we want to bring in Victoria Greene, who is Chief Investment Officer of G Squared Private Wealth. Victoria, let's talk a little bit about this. When it comes to the banks, you are concerned about the financials, but not all of them. In fact, JP Morgan, you actually like.
I do. I think the smaller cap and the regionals are certainly under pressure. We've seen continued deposit flight. That split between money market rates, treasury real rates, and what's being offered in checking and savings is really driving deposits out. And we've seen record inflows to money markets. So I'm not sure deposit flight is done yet. I think it's done if you were worried about your bank going under. If you were worried that you were going to have an FDIC moment, I think you've already pulled your capital out. But I think regionals are going to struggle. I think the large caps are generally going to be a beneficiary here. So we do like the JP Morgans. I think they're all going to come under a little bit more regulation pressure. They've had to raise lending standards. So I'm not saying that this is a sector that's just going to take off. But if I do want to play financials, I'm going to play my large cap, my blue chips, and really not be chasing after some of those more risky regionals at this point.
I mean, Jamie Dimon himself brought up concerns about whether the regulators will make these banks uninvestable because they could do things like say you're not going to be able to buy back stock or limit the dividends that they're allowed to put out because they want higher capital.
I don't think there's any doubt there's going to be more regulations, especially in the small to mid-size area that maybe missed the too big to fail regulations in that first sweep in '08. So I think you need to be aware of what that does to profit margins, what that does to the amount of risk a bank can take, the type of loans they can make, the type of things they can do with their capital, and also then the compliance costs of going through those audits and hitting those regulations. It's going to take a little bit for them to work through, but that's certainly a specter that may slow down profit margins on financials, as well as if you look at the deal market as completely dried up in Q1. So anybody with investment banking and deal making is looking at likely a little bit lower revenues there, though they made it up on the trading side. It was a tad volatile there at the end of the quarter.
The other place you like in the financials would be a major card company like American Express.
Absolutely. Their charge-offs are lowest on the street. Their delinquency rates are 66 basis points. They're a quality card company. And I think what might surprise people is they're picking up the millennial and the Gen Zs. They're like 60% plus of their card membership ads last quarter were those areas. They're not just an older person, 65-year-old plus credit card for the people that are traveling and wealthy. They're also getting the emerging wealth. So I think they're doing a great job of diversifying their card base. They are a little bit on the higher end, a little bit higher quality client base, as well as then they've got this cabbage funding that a lot of people aren't talking about. But if banks step back, traditional banks step back from lending, they're a big, small to mid-sized startup, mom and pop business lender that may see a little bit more on the cabbage side, as well as they are a high yield savings account. They do pay about, I think, 3.25% right now on their savings deposits. So they are part of the area in financials that is picking up deposits as they're fleeing traditional checking and savings that are paying them 5 basis points.
The trade that really was in vogue in the first quarter was getting out of those financials into technology. Technology's seen a massive gain, up something like 20% versus up just 7% for the S&P 500 for the year. Anything in the technology names that you actually like, or would you steer clear because they've run up so much?
Yeah, we do like some of the mega caps. One I really like right now is Netflix. And I think one of the things is that Netflix has really found its footing in this age of streaming wars. I think we'll see a pickup of subscribers. Netflix estimates there's 100 million subscribers out there that are piggybacking off of somebody else's account. If they can even capitalize on 25 to 50% of them without alienating their brand, which is a very tight rope to walk, then they're looking at a major pickup. And Bank of America, citing some third-party data, recently came out saying there was a meaningful acceleration in Canadian accounts. Canada started the password crackdown. And so if we see this password crackdown drive new accounts, they already have the ad-based supported tier, and they're getting into a gaming platform, I really think they're finding their footing, as well as they are capitalizing on this true crime drama, some of their best and top rated stories, and they're going to continue to build around that genre. And I think they've got a really good content slate.